Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So with this past tax filing season was the first season where we saw the impact of the Tax Cuts and Jobs Act. And one of the provisions of the Tax Cuts and Jobs Act was the 20% qualified business income deduction. So in a nutshell, you were able to deduct 20% of the profit from your business. And this is for pass-through entities. So this is your S-Corps, your partnerships, your sole proprietorships, single member LLC, multi-member LLC, as long as you had not elected made any corporate elections. This applies to you. And so what you would see on your tax return is a line that showed, that 20%. Now, the 20%, listen, there's other limitations. So you either get 20% of your profit or 20% of your taxable income, whichever one of those is the least. Right? I got my notes here because there's a lot that goes into this QBI deduction, okay? But I want to just kind of give you a summary of what it is so that you know. Now, the income deduction is available to single filers 157,500 or married filing joint 315,000, and that's going to be inflated for it is going to be indexed for inflation. So I don't know what the 2019 is yet. I really don't care at this point. I'll care in a few months. But anyway, in which I take that back. You should care, because if you're going to really maximize this deduction, you really need to know what your income limitations are. So definitely should know that. Now, if you are under that minimum threshold, then it doesn't matter what your business is, then you are eligible for the deduction. However, if you have what's called a specified service trade or business, then there starts to be income limitations as you exceed those minimum standards. And so those are in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, investing, and investment management. Yes, I side-eye all of the finance, because how are we going to be limited when we're the ones that help people make money? That was just wrong to me. I took it personally. Yes, I did. Okay. So if you're in one of those fields, then you start your qualified business income deduction starts to phase out. So then, then the question is, how do I, as a business owner, maximize this deduction? Well, there's a couple of things that you need to have in place first. Number one, you need to have your bookkeeping in order. Every time we talk about whether we're talking about reducing your tax liabilities or maximizing tax credits, it's going to start with your bookkeeping, because you really have to know the status of your business. You got to know what your profit and loss is. You got to know how much money you're dealing with. If you don't know that, then this is all for naught, because it's not going to work for you. So you've got to know that about your business. Number two, you need to have a financial team. You need to have someone that you can go to for tax planning. The summertime is a great time for tax planning, because it's after the busy rush of tax season, and it's also before a lot before the end of the year. So you've got some time to make some adjustments going forward towards the end of the year and into the next year. So I highly, highly encourage you, to get with your tax professional, your CPA, to really do some tax planning and looking at your overall tax picture. One of the other mistakes that people make when it comes down to planning their business is they look solely at their own income and don't take into account your spouse's income and any other type of investments that you have. It's all a big picture deal. So if you are going to be new to tax planning, just know that you need to tell your tax professional everything. They need to see your entire tax picture. This is why we want to review previous tax returns, so we can see what we're dealing with, because that's the only way that we're going to be able to give you the best advice. So number one is if you know what your profit is, then you will have an idea of whether or not you are getting close to that income limitation. And this also includes your spouse's income. So if you've got a spouse that's bossing out all on their own and can put you over the limit, you might need, based on your profit, the first thing you might need to do is reinvest in your business. Whether you are planning for retirement, you might need to upgrade some things. You might need to go spend some money in your business in order to maximize that tax deduction, because you're going to get the benefit anyway. You're improving things in your business, and you're also maxing out that 20%. So that's 20% that you don't have to pay taxes on, okay? But number two is you may also need to try to shift some income to the next year. If you're getting towards the end of the year, you may hold off some invoicing so that you hold off invoicing at the end of the year for the next year, so that you receive that income for the following tax year versus this year. Okay, because once that income is received for this year and you don't have time to do anything with it, well, if it bumps you out, it bumps you out. Because if you're in that specified service trader business, one of the professions that we talked about, once you get to a certain income level, you're phased out completely, right? So there's a lot of math involved in this, y'all. So this is why you're not going to see me sitting up here trying to do this math for you. There's a lot that goes into it. And this is why I tell you, go get a tax professional, because even with this year, with this first filing, because the IRS was still issuing guidance, there was software, the software programmers just didn't have time to program the software correctly. So if your tax professional did not know that your QBI deduction was not being deducted properly, then you missed out. You may not have gotten all that you were supposed to get, or you may have gotten too much. It just depends. So if your tax professional didn't know how to do it by hand and your tax software wasn't up to date, oops. Yeah, and I do mean oops, because that was one of the things that really dragged out the tax season for us, is that we did have to go through to make sure that these deductions were being taken properly on people's tax returns. But and number three is that, if you have gotten to the point where you have exceeded the limitation for taking the QBI deduction, you may need to change business structures, period. Now, one of the things about the QBI deduction is C corporations do not have a qualified business income deduction. However, the corporate tax rate is, the corporate tax rate period is 21%. So you've got to look at the overall picture to say, okay, is it going to make more sense for me to have a C corporation, and that C corporation is paying 21%, and is that going to be less than what I'm already paying on my personal taxes? You got to know how much you're paying in taxes already. So so if you have exceeded that upper income limitation to where you have phased out of the qualified business income deduction, then you may be looking at whether or not you need to change your business structure. And really, it's all about the math. Right? It's all about the math. And it's not just taxes that you're taking into consideration. You're taking into consideration compliance costs as well. Everything needs to be factored into it, because even though tax-wise it may make sense for you to change to a different business structure, is what is the compliance cost? Is the compliance cost going to be more expensive than paying a little bit more in taxes? You just have to do the math on that. That's all there is to it. So when it comes down to the qualified business income deduction, the only way that you're going to know is you've got to know your numbers. And there are too many of us as business owners that don't have proper bookkeeping in place, so that you really don't know how much you're making. If here we are at the time of this recording in the middle of the year. It's June. So if at the end of June you don't know what kind of profit you're making for your business, I'm going to encourage you to stop what you're doing right now. Get your bookkeeping in place so that you know what is going on in your business, so that then you can make a plan to be able to make money throughout the end of the year. But like I said, also to maximize that deduction so that you're not losing out based on income limitations, because that'll be the first thing that will knock you out. and again, it's a big picture thing. It's not just you, it's if you have a spouse and, in their job, you've got investments, you've got all sorts of things that, to your tax credits. You've got all sorts of things that go into your tax makeup. So it's not just one right answer for everyone. Okay. So I hope that gives you something to chew on. But at the end of the day, it's all about knowing your numbers. Once you know your numbers, then you can start to make more intelligent decisions about how to maximize the qualified business income deduction. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, my name is Lysandra Everett, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see you next time. Bye.